Hi guys, and welcome to our podcast. Today we are going to discuss about the biggest 8 mortgage mistakes to avoid when buying a home, and how you can avoid each of them. Buying a new home is always an exciting step, but it's also very stressful. It's probably the biggest amount that you have ever spent in your entire life. So, how should you deal with it? What are things you should have to take into account? A mortgage is the most serious debt you can possibly owe. Because of their large amounts and long terms, sometimes they can go wrong at any time, and the potential losses might be catastrophic, even if it means losing your home. Therefore, and due to the stress during the process, we may get some unrealistic decisions. In this podcast, we're going to talk about the main mistakes people make when choosing and managing a home loan. Also, you will find some advice on how you can maneuver through it all. Keep in mind, it's extremely important to locate the best possible offer, since this will be a loan you'll be repaying for almost 3 decades. Having the best interest rate and low fees is crucial. This will determine the overall cost of the loan. The first mistake I would like to discuss is about a lack of research. Before you can even close the mortgage, you need to shop around. Many people don't do research and compare different offers, but rather pick up the first one on board. When you buy a product, you always try to find the best deal. Quality, price, brand, etc. This is exactly what you have to do before choosing a bank and accepting an offer. In January 2015, the Consumer Financial Protection Bureau, the CFPB, released some interesting data. According to a report, 50% of the whole population consider only one bank prior to their application. Approximately 75% apply for a mortgage using only one bank. Do you think this is exactly the definition of wise? No, it isn't. First of all, what if there are offers that beat the one you've chosen? If you don't compare, you never know. Let's not forget that mortgages are very, very long. Is it the same to you if you pay $600 or $800 each month? There's some online platforms which allow you to compare different rates and fees. In addition, you can go through some credible reviews by customers and get an idea. You should never forget the credibility and reliability of your lender are also key. Buying a home you can't afford is, in my opinion, the biggest mistake you can do. Don't purchase a home you won't be able to afford. In some cases, banks approve their borrowers for large amounts of money, like $500,000. Of course they will. After all, they're going to charge you handsomely for using their money. Does that mean you need to buy the most expensive home possible? The answer is no. Not only will a larger loan increase significantly your monthly payment, but it will also incur all sorts of nasty expenses. What about the taxes you have to pay for the property? The higher its value, the more you're going to need to pay. If you push yourself to your financial limit, you won't be able to maneuver easily. And should an extra expense occur, you will be overburdened by your mortgage payment. Perhaps you will have some health issues, or your income will decrease. You can use a maximum mortgage calculator to get an initial estimation, but my advice is not taking the maximum you can, but a bit of a smaller amount. Maybe you are single and planning to start a family. These all need some room for consideration. Mistake number 3 is just a lack of basic knowledge. I know. No one teaches us these things. No one cares how we actually cope with real life. Life, people say, is also the best teacher, and if you don't know simple things and terms, then the problem is yours. Many people have no idea what an FHA loan is and how exactly it works. Zillow research has shown that 42% of potential home buyers don't know that it's not necessary to be a first-time buyer to take out an FHA loan. If you've done some research and chose a specific lender, don't hesitate to ask the right questions. Most probably a third party will participate in the process. Could be an attorney or a real estate agent. They should also be well-versed in loans and mortgages. Focusing only on the interest rate is another common mistake for many home buyers. This is closely related to the previous tremendous mistake. When people don't have basic knowledge, they tend to focus on only one part of the problem. Most borrowers are only fixated on the interest rate of their mortgage. Well, that's totally alright, but don't waste your time waiting for the rates to drop to 0%. This is not happening anytime soon. Most probably in the meantime, you will miss on some good offers and deals. Don't be focused on the interest rate that much. Most probably 0.3% will not have such an impact on the monthly payment. Ask yourself a question. If 0.3% bothers you and you feel like it's too costly, do you think that you can handle a long-term loan such as a mortgage? You can instead lock in your rate before closing, and we're going to talk about it next. Another thing many home buyers do is forget to lock in their interest rate. In the previous mistake, we mentioned locking the rate. What is this and why is it important? Before you sign all the documents and the property is yours, you can choose whether to lock in your rate or no. This is entirely your decision. This is something you have to specifically agree on with your bank before closing. My advice? Don't forget to lock in the rate. All in all, this is an agreement which the lender agrees to keep the interest rate unchanged for a specific period, from several days up to 3 months before the closing date. If you forget to do so or deliberately skip this part, the chances are high that the rates will go up. For instance, whether it's a pre-approved request or not, at the time you fill in your mortgage application, the rate is 5.5%, but you don't lock it in. Then a few weeks later, the rate rises to 6.5%. This means that your mortgage will have a 6.5% rate during the whole term. Sometimes borrowers have the option to extend the rate lock period should it end. Keep in mind that usually banks charge buyers for that. Have you considered buying something and found that in the end the costs are much higher than initially expected? Take a deep breath and be ready for the next portion of warnings. When you purchase a home, it means you become an owner. That being said, your property will generate expenses. First of all, you have to pay property taxes. The amount you owe depends on various factors like the type of property, value, location, etc. Taxes are something you simply cannot avoid. Another cost which may surprise you is the maintenance cost. The bigger the house, the more you can expect. As time passes by, you will probably need to make some repairs. This will also come from your pocket. Another common mistake is not saving enough for down payment. Down payment usually sends shivers down the spine. This is the so-called upfront fee, and most lenders want at least 20%. This can show that you are a reliable person. What's more, larger down payment means better terms and vice versa. One of the most annoying things is private mortgage insurance. If you don't have the desired 20%, the lender protects themselves by imposing a mandatory insurance on the property. But there are still some great ways to avoid the PMI. This amount will be part of the monthly payment. However, you should know that this insurance protects the lender, not you. If you stop paying or go bankrupt, this insurance will help your bank restore some of their money. How much is PMI? Well, it depends on a lot of things, but the main factors are, of course, your credit score and the down payment. The lower the score and down payment, the riskier you are as a client. Therefore, you will have to pay higher insurance. On average, it's approximately 1% of the loan. Last but not least is to make sure you check credit reports. As a borrower, you have the right to receive annually a free credit report. There are 3 major credit bureaus, and they are Equifax, Experian, and TransUnion. What do they contain? Credit reports contain a lot of information you can use. Of course, you can find some personal details. There you will also see your employer's details as well as information regarding revolving accounts, loans, account history. In there, you'll also be able to see your recent applications and any public records, such as bankruptcy. Occasionally, people will find mistakes in their reports. You have the right to contact your lender and dispute the errors. I recommend that you check your reports before applying for a mortgage. Even small mistakes can lead to a lower credit score. This, on the other hand, might lead to a rejection of your application. If you do that several months in advance, you will be able to fix those mistakes and also improve your credit score. The higher, the better for you. On the bottom line, these 8 mistakes are very common among first-time buyers due to their lack of experience. They are not ordered from the most important to the least. Each and every one of them is crucial, and avoiding them will do you good. In fact, this might decide whether your bank approves or declines your application. That's it for now. On our website, you can find more posts and podcasts as well as calculators and other financial tools. What has been your biggest mistake? We would love to know your thoughts, so feel free to share them on the comments below. I hope you enjoyed it. Don't forget to subscribe to our podcast channel on YouTube, and we will see you next time.